Stock indices are on the back foot this morning despite some better than expected corporate earnings. Want to know more? Keep watching. Hello, I'm David and this is Trading Today. Yes, after yesterday's good gains across all the major US indices, which saw the Dow end the session up 0.9%, S&P up 1.1% and the Nasdaq up 1.2%, we're giving back a proportion of that this morning. Now that's despite the fact that we've had some good strong earnings results from the likes of Bank of America, Johnson & Johnson and Goldman Sachs. All three beat on earnings, beat on revenues, and in fact we saw Bank of America and Johnson & Johnson both up about 1.8% directly after their results. Those have drifted back down since then. Goldman Sachs, as I say, as expected, also some good news from its bond trading. Basically the shares are flat, if not slightly lower, because we've just had the latest retail sales report from the US and it came in much stronger than expected. The immediate reaction to that, a further sell-off in stock indices and a bounce in the dollar. The reason for that, of course, is that good data is bad, bad data is good. It's that old saw. Now, whether we unwind from this in the next hour or two or whether that sets the tone for the day, we'll just have to wait and see. Other bits and pieces. Yesterday, Patrick Harker, member of the FOMC, said as far as he was concerned that the Federal Reserve's program of rate hikes should be over. So he's firmly in that section of the FOMC who believe that really the market's doing all the heavy lifting for the Federal Reserve. This is because bond yields have risen so much, looking at US Treasuries in particular, that it's really tightening market conditions without the Fed, and that means the Federal Reserve shouldn't really need to tighten monetary policy itself any further at the short end, where the Fed funds rate itself. Now, we have seen bond yields go up quite sharply. If you remember, about 2.5 weeks ago, the US 10-year Treasury note hit its highest level since August 2007, 4.88% the yield there. It then took the next week and it came down very sharply to around 4.56. It's now added on about 20 basis points from that as things stand at the moment. So if we all thought that the bond market was over, it probably isn't. Now, in addition to that, of course, we've got some big earnings coming up tomorrow. After the bell, we'll have Tesla and also Netflix. So plenty more to look out for and a lot of Fed speakers due this week, including Jerome Powell on Thursday. Thank you very much for watching. I hope you found this of interest. If you did, please like and follow, and best of luck with your trading. Goodbye.